This is the Asia Train. I'm Shery in Tokyo. The top stories this hour. Oil prices jumping as the U.S. says it's intercepted an Iranian attack on its troops hours after President Trump hosts Israel's prime minister at the White House. Chipmaker SK Hynix misses second quarter profit forecasts, adding to fears that the AI boom propelling the industry may be slowing down. A cautious open ahead for Asia's an accelerating rotation out of U.S. chip makers leaves the Nasdaq 100 on the brink of a technical correction.
I'm Haidi, Stroud-Watts in Sydney. Take a look at the setup for trading across Asia. As Shery mentioned, caution is really going to be the sentiment that prevails in this session as we hit midweek in this region, a region that is, of course, so heavily loaded with these chip and AI-related names at a time when we are seeing so serious questions creating that route. But we're also seeing a rotation back into that risk-off sentiment when it comes to these war fears, right? Oil surging, rebound after that three-day decline, with New York traded oil still higher by 4.25%. Rising as much as 5% at one point to top $83 a barrel, pairing some of the 14% drop or some more that we've seen over the past three sessions. This after we see fresh fighting erupting in the Middle East, continued threats to energy flows prevailing, and the U.S. military saying that it successfully intercepted an Iranian attempted surprise attack on American troops based in the Middle East. So we are seeing this re-escalation after what had been some sense of optimism and certainly some positivity coming from leaders, including President Trump, talking about the fact that these negotiations were still on foot. We've also had President Trump welcoming the Israeli Prime Minister Netanyahu to the White House as these new Iranian attacks really complicate these levels of diplomacy as well in these talks. Switch out the board, of course, we're also watching what happens next with this chip stock rout, right, which really deepened overnight. The debt jitters, these concerns over circular funding, the semiconductor stocks really saw really even greater losses, as particularly as we also consider that continued signs of progress when it comes to what China is doing in their advanced chip making sector, worrying the overall sustainability picture for the AI spending boom and the amount of capex there. If you take a look at what we're watching at the moment, Nasdaq 100 obviously firmly there in the red, and we are watching what happens when it comes to Korea. Of course, this is a market that has been really hit by a series of trading suspensions in the Tuesday session, that sell-off just exacerbating across sectors. The Kospi, I should point out, has fallen more than 30% from its peak about a month ago. We're also watching Japan with some of those tech names, but Goldman, for one, saying that Japan, with that sharp sell-off, has created actually a buying opportunity. Still, the focus will be on Hynix today. The record profit missing investors fairly lofty AI expectations, smaller than expected, 557% for that quarterly profit. But let's get the latest when it comes to geopolitics. And the U.S. Central Command says it's intercepted a surprise Iranian missile attack on U.S. forces based in the Middle East. Let's get more on this story with our Washington and White House correspondent, Jeff Mason. So some pretty sort of aggressive turnarounds for expectations, right? Even though we didn't have a lot of details, the mood music seemed to be a little bit brighter. But this kind of shows us that there's so much volatility in this situation still.
It certainly does, and I think you're spot on to say that the mood music was a little bit brighter. President Trump setting a much more positive tone, or at least a sort of cautious wait-and-see tone over the last few days, and that would seem to have now changed. And if past his prologue, President Trump does not react well to attacks from Iran, particularly when he believes that there was some kind of an agreement or on a pause or on a ceasefire, which there wasn't necessarily over the last few days, but it did seem like both sides were at least tacitly agreeing to hold back. So no doubt that's one reason why markets are reacting as aggressively now as they are, because that little pause may be over. We'll see how President Trump responds.
And Jeff, this, of course, coming at a time when President Trump just met with Prime Minister Netanyahu. How aligned is the president right now with the Israeli Prime Minister?
Well, the Israelis have portrayed them as being very aligned. Prime Minister Netanyahu coming out of the meeting and saying it was one of the best meetings, or perhaps the best meeting he'd ever had with the president. And that comes at a time when there were signs of tension in that relationship. President Trump gave an interview to Fox News earlier in the day in which he was critical of reports that the prime minister was coming and going to give him examples or additional intelligence suggesting that Iran was working continuing to work on its nuclear program. The president saying in that interview that he didn't need Bibi to tell him that, referring, of course, to Bibi Netanyahu. So some tension there, and yet the portrayal, certainly from the Israeli side anyway, after today's meeting was that it went very positive. We did see a bunch of pictures that also had body language that appeared quite positive. So I don't know what to conclude from that, but certainly the message that both sides seem to be projecting today is that they are on the same page.
We've heard a lot of reporting about the ways in which perhaps the US might be running out of options, right? Concerns about the munitions depletion, concerns that perhaps in terms of strategic effectiveness, we've reached a limit with these operations. What do you then make of the timing of this attack with, as you say, Netanyahu meeting with Trump? Is this a calculated effort on Iran's part, and does it sort of speak to their confidence and willingness to be quite aggressive?
Well, certainly the latter, and I think I would refer to the statement from CENTCOM that you already mentioned, in which the U.S. portrayed this as a surprise attack, and the element of surprise here at a time when, as we were already saying, both sides had appeared to be moving back a little bit or exercising a pause, is certain to sort of increase tension, increase upset in Washington. And it is certainly a sign, I think, to your question, that Iran is very strategic and is watching closely what's happening and is apparently not done with hostilities from its side.
Jeff, any updates when it comes to these crucial waterways, whether it's the Strait of Hormuz or the Red Sea?
No real updates other than to say that those remain sticking points, and those also remain absolute priorities for the U.S. president, who, as we have talked about on your show before, certainly has an eye on politics and on the political reality of the midterm elections coming up in November in the United States, and the political risk of high fuel prices that has come, or that have come from this multi-month war. He has also said that he does not want to preside over an economy that turns into a Great Depression, and yet he has also repeatedly said that he's the only president who has taken on Iran in the way that he has here. So the Strait of Hormuz and opening up that waterway and getting energy flows back to the levels that they were before the war is a top priority to him. And right now they're still working on that.
Got under 100 days now before the midterm elections. What are some of the other issues that are pressing when it comes to President Trump? Because we know that this war is not domestically popular either within his own party or with certainly the broader populace, given these economic concerns too.
Well, economy, that's certainly usually the mantra for any candidate going into a midterm or a presidential election, because that's what voters care about the most, and they think about their pocketbooks as they're going to the polls. You saw that reflected in the president's trip to Michigan this week, in which he was sort of giving a sales pitch for his economic agenda and for his economic record, despite the fact that the Iranian war or the war in Iran has led to inflation and led to higher fuel prices, as we were just discussing. But he clearly has economy on his mind. In terms of other issues, the president has made a huge priority out of passing the SAVE Act, which is a bill that he wants with regard to elections that would put restrictions on mail-in voting, require voter ID. That is just not passing at the moment. It does not have enough votes from Republicans, and it has 0 votes from Democrats in the Senate. But your question was, what are his priorities? This remains one of them, and he has encouraged lawmakers not to leave Washington in August for their regular recess in order to stay and work on that bill. That call did not go over particularly well with his Republican colleagues, and it doesn't look like they're going to do it.
Bloomberg's Washington and White House correspondent Jeff Mason there. Still ahead, SK Hynix posts a 557% jump in quarterly profit, but falls short of very, very lofty expectations. This is adding to fears the AI boom may be slowing down. We go through the numbers next. This is Bloomberg.
Today The Fed decides.
Share wars just around the corner, setting the stage for a real debate. Is this meeting live or not?
Our number one objective is getting policy right. And if we get policy right, we can deliver lower prices.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis.
The sum of this is real GDP and the inflation piled on top of it.
That's going to cause inflation that does come into consumer goods in other ways.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
Watch SK Hynix shares on next trade after its second quarter operating profit missed the average analyst estimate, despite jumping more than 550%. Let's get more on this with Bloomberg M-Life strategist Mark Cranfield and our markets reporter Anthony Stevens. Anthony, let's start with SK Hynix. I mean, this stock has become a sentiment test for AI hardware. How come the profit jump 500-fold is really not cutting it?
Right. And this speaks to where expectations are, right? Like you have a record OP, it's a 557% jump. They're talking about 80% plus margins, 83. You have ADR that went into the results with 20% plus premium. And that speaks to the problem here. It's positioning and expectation. Meeting very high standards is becoming very difficult. So going into the results, there are no sells on the stock whatsoever. There are 40 plus analysts that are buys on this stock. The average target price is almost getting near double where the price is at the moment. So there's a lot in the price. There's a lot of expectations, and the market reaction was sharp on the open as next trade open. It's starting to moderate a little bit, and this stock is obviously going to be volatile as it has been this entire time period. So it will dominate the Asian tech trading session, which was weak going into yesterday. So remember, yesterday we had a circuit breaker in Korea and the market traded through that circuit breaker, and now we have this event. So today is going to be an extremely volatile day, meeting crowded positioning and an analyst base that is going to be surprised by this result.
Mark, what are the implications for the tech sector now that we have the Philadelphia Semiconductor Index also in a bear market and this rotation continuing out of tech?
Well, it's all about the threat from China, as Anthony was saying, positioning going into these Hynix numbers. In fact, really going into the past couple of weeks has been very skewed towards the idea that the hyperscalers would continue to pay whatever it takes to get the chips they need to build their data centers to supply the AI products. Investors could see that they were enjoying the ride. Suddenly, there's a real threat from China, which is getting closer all the time, that they can undercut pricing on a lot of these AI-related chips. We've seen a number of IPOs in that sector, Chinese companies getting a lot of attention. The fact that they can do it at a cheaper price, not all the products, but enough to scare investors. And that is the threat to the whole chain. The fact that the hyperscalers may need to pull back, that the chip prices in the future won't be as high as being projected in the earnings calls that you see for Hynix, for Samsung, for the other major players. So the whole story is under threat. And that's why you've seen Hynix halve in value in the past month or so. So even though the current numbers look outstanding, that still may not be enough. The fact that it has fallen by such a huge amount in the past few weeks may mean that today there is a bit of a bounce. By now, there might even be people who've got short of Hynix in the past couple of weeks, and they may be willing to take some profits. We're coming towards the end of July as well. That would be a pretty convenient time. That might not tell us very much about the future at all. What happens when we get into a new month in August, positioning is much cleaner, then we'll get a better read on whether or not people believe the hyperscaler story has legs or whether it's all over. And we have to go back to looking for other reasons to get involved in the tech story.
Anthony, is this a straight up positive story when it comes to China tech assets and perhaps a little bit more broadly into the Chinese market? Or are there now concerns that, we know what happens when it comes to Chinese industrial policy in the past, right? Is overcapacity and some of those fears now also starting to bubble?
We definitely, that's fantastic spot, because we definitely saw some of that play through in the session yesterday. We had Chinex down 7%. So in essence, China disrupted itself. Now the valuations in the Chinese market is, if anything, way more aggressive than in Korea or in Taiwan, because this is based on backwards technology that is being priced at forwards sales. So that initial reaction points to the fact that there is fear that there's overcapacity may result from the fact that they have more DUV machines and more readily available tech. What remains to be seen is the demand from Chinese hyperscalers. So the new LLMs coming out, how resource intensive are they? How are they going to go and build out the data centers to power this growth in Chinese LLM sophistication? And we had some indications of that overnight. You heard we had reporting that Moonshot was reaching out to NVIDIA, amongst others, for new processing. So how that evolves over time will determine the winners and losers of the China AI trade. Yesterday, it was instructive to see that the Chinese internet space outperformed the Chinese hardware space, mirroring the US kind of hyperscaler versus SOX index dispersion. So that is a big trade to watch in the back end of the year. Where do the profits from the AI trade continue to accrue? Do they keep loading up on hardware, or are the hyperscalers going to start being more capital disciplined and hang on to more of this money?
Mark, we were talking a little bit about, the war sort of negotiations, the mood music seemed a little bit calmer, but now with this surprise attack from Iran, it's right back in focus again. We've also got a Fed decision. How live is that element of central bank surprise? Because we again see oil prices headed higher.
Yeah, I think we'll look past oil. We won't be spending too much time on that, but the Fed and the Bank of Japan are huge. And there's even been suggestions that the surprise might come from Japan rather than the Federal Reserve. We've got a lot of hedge funds betting on the fact that it's a very close call in the Fed meeting. It could be a coin toss as to whether they go now or whether they go in the next meeting in terms of raising interest rates. So it certainly will be a very lively meeting. There's bound to be fallout from that, whichever way it goes. Treasury bonds are already a little bit softer in the market this morning. There could be a lot of volatility in the short end of the Treasury curve. The Bank of Japan isn't expected to do anything at all. Traders are assuming there's almost zero chance that anything will happen. And yet, here we are. The yen is now 164, extremely weak. And a lot of people are thinking here, well, this will be a great time for Governor Ueda to really shock people and go for a hike now rather than waiting until December when it's expected. Of course, not many people are putting their money on the table, which actually increases the chances there will be a massive market reaction if the BOJ do go this week. Or maybe they go for a smaller hike just to get something in the way. But certainly this week's decision out of the Bank of Japan, the whole meeting, is a lot more interesting than it looked just a few days ago, now that people are looking at all the equations, putting the FOMC, the Bank of Japan together, and where we're looking at the interest rate differentials. It's going to be a very big, busy week. And that's even, don't forget, we've got Apple and Meta as well. No time for switching off.
Yeah, definitely. Amazon as well coming out, Microsoft. Anthony, when it comes to the Asian session, what will you be watching in terms of all of these semiconductor-related names, whether it's in Korea with SK Hynix, Samsung, or also here in Japan?
We're going to get a real vibe check of retail investor sentiment today. Will Korean retail come in to buy the dip in Hynix? You're seeing some indications of that in the next trade. I'm very interested in how that session progresses up to the open. It's been quite a big dip that's been bought here. So there is some risk appetite. Korea has absorbed a lot of foreign selling. So how much firepower do they have? We then go into the Hynix earnings call, right on open. And it'll be fascinating to see the details of that operating profit miss and that sales miss. What drove that? Is it a movement of sales, from reported sales into some of these LTAs? Maybe that's one factor. What do they do? What do they plan to do with their Kioxia stake? Where have they marked that? So the details around Hynix will be at 8. And then we go into the Chinese session, and how do the Chinese trade these Hynix results in the CXMT IPO? That will be absolutely pivotal to the Chinese session and how that gets priced. And finally, the Chinext itself needs to find a flow, as kind of you and others have been talking about. The the Chinese ecosystem needs to believe in itself in the equity market. And then we get to pricing South Asia and this oil price, which is going to be completely different from the tech story. So it's going to be a day of transition with multiple data points and a real need to pay attention to the details.
Bloomberg's Anthony Stevens there, together with Mark Cranfield. Really great to get your insights, guys. And of course, we will be watching broadly today in Asia session, the chip sector, also specifically SK Hynix reacting to those results. We asked CLSA's head of Korea research when they see an end to the correction in the semiconductor sell-off. More ahead on the Asia trade. This is Bloomberg. At least 3 people have been killed after a powerful 7.1 magnitude earthquake hit Japan's southwestern island of Kyushu on Tuesday. An unknown number of people may still be trapped in a collapsed shopping mall in Kumamoto Prefecture, a hub for Japan's chip industry as well. Breaking news editor Gareth Allen joins me here in the Tokyo studio for more. I mean, we didn't even feel it here in the capital, but what sort of damages are we talking about?
Yeah, exactly. I mean, 4:30 yesterday afternoon, all the alarms went off. Of course, it was all very scary, but it was clear that there was no shaking in Tokyo. It's way down the other end of the country in Kumamoto. It was a very big earthquake, 7.1 magnitude, which is huge, and it actually hit shaking intensity of 7 on Japan's scale of 7. So that's like the very, very top end of shaking intensity. And if you saw the images on the TV of like the cameras shaking, it was incredible. It's obviously a very, very big earthquake, and there has been some quite significant damage. We've seen images of bridges collapsing. We've seen images of buildings collapsing, and apparently there have been some people inside buildings that have collapsed. At the moment, we know a couple of hours after the earthquake, there was an explosion at a shopping mall, the Aeon shopping mall in Kumamoto, which caused enormous damage. You look at the images of the building, and the walls are just destroyed.
What's the government doing now?
The government, Takeichi yesterday, she was on TV, they've deployed 3,600 odd self-defence forces troops to be down there. The fire services and the police, they're all in action down there, and Takeichi has formed a special committee to assess the damage and gather information on what's happening.
We're just getting the latest headlines on the Bloomberg that Honda is reporting no injuries at their Kumamoto plant, but they will keep that plant shut in the morning. The restart is undecided. Japan Airlines also planning to resume flights to and from Kumamoto after 1 p.m. Wednesday. And of course, we haven't even talked about the fact that that whole region is a hub for the semiconductor industry.
Exactly. I mean, Kumamoto is a huge manufacturing base in Japan, and semiconductors is one of the big industries there. And Taiwan's TSMC, which has recently built a huge fab in Kumamoto, they actually evacuated all their staff yesterday afternoon after the jolt. But as of last night, they said that they confirmed that safety is okay at the factory, and we believe that they're going to be resuming operations this morning. So is there catastrophic impact on industry in Kumamoto? Probably not, but there is certainly some damage, and it's certainly something we're going to need to keep an eye on today as the news flows in.
And we'll be watching some of that stock reaction today when the market opens in about half an hour. Bloomberg's breaking news editor Gareth Allen here joining us with the latest on that earthquake here in Japan. More ahead. This is Bloomberg.
Well, volatility is set when it comes to this Asian Open, and so much of this is on the continued turmoil in the AI and chipmaker space, right? This highlighting just how much we're dealing with. The stakes are so high. SK Hynix presenting that quarterly profit of 557%, not enough for investors. There's a lot at play here, right? The advancements that we've seen in China, the concerns over the potential really truly disruptive impact of that. even though we've also seen Chinese stocks suffering under the weight of that as well. But that broader sell-off is set to continue. We've seen the Nikkei 225 down 0.4%. Having said that, Goldman thinks that this is actually a buying opportunity. US futures looking pretty flat at the moment if you kind of disregard the sentiment when it comes to the NASDAQ and the Philadelphia Semiconductors Index. But the other story, of course, that's causing some risk-off sentiment is the reignition of hostilities in the Middle East. We'd had some sort of calm sentiment and rhetoric from President Trump and other leaders, but we saw that surprise attack from Iran really highlighting how much uncertainty remains. That caused that spike in oil. WTI at one point was high by just about 5%, around that $83 a barrel mark. And we've seen some of that being taken out of the 14% decline that we've had over the past 3 days. So there's not a lot of certainty, Shery, for what's going on at the moment.
Yeah, especially as you said, we have this slew of earnings results to come as well, including big tech, Samsung as well. But we've been focusing on the AI trade around SK Hynix. And you said it, I mean, this is a sentiment test for AI hardware, right? The fact that their second quarter results missed estimates, despite the fact that profit rose 557%. Operating profit coming in at $42 billion. The company now saying that it secured multi-year contracts with about 10 customers. Still, we have seen, of course, this stock take a beating, not only in the Seoul session, but when it comes to their U.S. traded ADRs. Right now, futures pointing to some upside at the open, as we're seeing the Kospi futures now under a little bit of pressure overall. But our next guest says that the pullback in SK Hynix stock is a prime buying opportunity. Joining us now is Sanjeev, Rana, head of Korea research at CLSA. And this pullback has been immense. I mean, we're talking about down about 50% since their June peak. So what's leading to all of these concerns when you got operating profit numbers really coming at these levels, $42 billion?
Hi. Yeah, good morning. Thanks for having me on your program. For SK Hynix, the 2Q numbers were, I wouldn't say it was a big miss. The operating profit was 7% below consensus, but it was mainly because of a weak product mix in 2Q, and I think this is mainly a timing issue as the company's HBM4 shipments pick up pace in third quarter and in the fourth quarter. We expect sequential earnings improvement to continue. In third quarter, we expect another 30% increase in profits. But I get it that overall there is some skepticism in the market regarding the sustainability of AI infrastructure capex. There are also concerns that surging memory prices could lead to reduced demand of memory in certain segments. So all these fears are there in the market, but I believe that 2027 is going to be a year of big shortages in the memory market, and we remain confident about our earnings forecast for the company, and the stock is now below 4 times next year's PE.
When it comes to cheaper AI models like Kimi K3, for example, we've been talking about it at length. What does that mean in terms of memory demand? Could we see more of it because of proliferation of these models, or are we going to see more model efficiency that actually could hurt these AI hardware stocks?
So for this, the new AI models that have come out in the last several quarters, actually, we maintain our view that, as we have seen in the past, that falling inference costs should ultimately drive wider adoption of AI use cases, leading to even greater demand for memory and GPUs, as cloud investments will need to expand accordingly. So we expect global cloud hyperscaler investments to expand by more than 30% next year, and the overall demand for memory should stay strong.
What about the news that China is now trying to mass produce immersion DUV lithography tools? What sort of impact does this have on the broader memory supply chain?
It's too early to say that, but yeah, I mean, there has been some news recently that China has started producing DUVs, and this is definitely adding to concerns. But for Korean memory suppliers, EUV tools are the mainstream now. EUV tools are orders of magnitude ahead of the DUV tools. And for Chinese companies like EUVs, access to EUVs is just not there at the moment. So DUV doesn't change the picture very much, but from a Chinese perspective, I get it that this is a big achievement towards localization. But the chips using DUV tools will still be actually bigger in size and less power efficient than those made using EUV technology. But I mean, there are some market concerns, but I don't think it will have any meaningful impact on the demand-supply situation for memory in the next several quarters.
When it comes to SK Hynix, then, we are now scrutinizing their HBM lead because Samsung seems to be catching up at this point. We have Samsung earnings this week as well. What are your expectations about this competitive dynamic?
Mm-hmm. So Samsung Electronics has done a great job in narrowing the technology gap with SK Hynix. And I would say that now on certain aspects, they might be a little bit ahead of Hynix. So as Samsung was the first supplier to start HBM4 shipments to NVIDIA, like back in 1Q, Hynix just started shipments only in the late 2Q. Also for HBM4E, Samsung has already submitted, its samples to customers a couple of months ago. So it seems that Samsung is now doing a great job, and this is reflected in the company's guidance. Samsung is expecting its HBM shipments to increase by nearly threefold this year, compared to Hynix shipment increase of about 60 to 70%. Of course, we are talking different bases here, so it's not directly comparable, but we expect Samsung to gain share in HBM market in the coming 2 years.
We've heard that Samsung might be also thinking about listing in the U.S. Given the lessons from SK Hynix, what can we expect?
So as far as I know, like the company has denied that they are considering this ADRs, but I wouldn't be surprised, like eventually, like if they decide to list their shares in the US, just like SK Hynix. I mean, there has been consistent demand from foreign investors, and going as far as back like 2015, that they want Samsung to list shares in the US market, and maybe company might consider this, and I think it will be a good step for the company to consider such a listing in future.
And Sanjeev, before we let you go, I just wanted to get your thoughts on the Kumamoto earthquake here in Japan, because we know that TSMC has a plant there. We know that Tokyo Electron also operates there. When you have natural disasters such as this, are they meaningfully impactful for these companies? And what does this mean for the supply chain in the next few weeks?
So I still need to get the full details, but as far as I know, I mean, if companies' production is impacted, then definitely there could be some short-term impact on the overall supply chain. But in the past, we have seen that such impact tends to be like very short-term. And there might be some production disruption lasting from a few days to a week. It really depends. So I'm not fully up to date on this situation currently, but I would expect any disruptions to be short-lived.
Yeah, we'll be watching the developments around the earthquake region. Sanjeev, Rana, really great to get your insights on the semiconductor space, head of Korea research at CLSA. And we're watching some of these stocks at the open here in Japan. In about 20 minutes' time, AI-related names face further pressure as concerns over capital expenditures and valuations intensify. Of course, we have been talking about SK Hynix in South Korea, but here in Japan, we're also watching the names like SoftBank, memory giant Kioxia. We've been watching ADRs of the OpenAI investor SoftBank overnight as well. Chip suppliers, including Tokyo Electron, for example. Tokyo Electron operates a plant in Kumamoto Prefecture, which was, of course, hit by that massive earthquake here in Japan. So we'll be watching any disruptions in that region, Haidi.
Shery, earnings in Australia also in focus, with Woodside Energy narrowing its production forecast for the full year. And of course, the world's biggest iron ore producer, Rio Tinto, posting a rise in first half profit thanks to stronger commodity prices. Bloomberg's Paul Allen has more on this. And really, beating some of these concerns over the war, over the tariff war as well.
Yeah, a good set of numbers. They beat analyst estimates. Net profit up 47% on year, $6.85 billion for underlying profit as well. A very healthy interim dividend too, $2.11 a share. So that's effectively a 50% payout on underlying earnings. Going forward, maintaining all the guidance on sales, output costs as well, but costs still a big focus for Rio Tinto. And we heard from the CEO Simon Trott a moment ago in the media conference saying Rio's going to be relentless in finding productivity benefits. It's also going to look for more significant cost savings. And already the company's been slimmed down under Trott's leadership, divestments of $5 billion forecast for this year. But if we look into some of those key commodities like iron ore, still the biggest revenue earner for Rio by far. Prices have held up pretty well, expected to continue doing so. Costs, though, rising as well, largely thanks to the war between the US and Iran. But that's also having other benefits for Rio Tinto. I mean, aluminium prices very, very strong because of all the disruption in the Strait of Hormuz. Copper prices holding up well as well. But there are some question marks around the copper story in terms of where this extra production is going to come from. We heard that there's going to be a ramp up in production from the Oyu Tolgoi mine in Mongolia. But after that, well, we'll be awaiting some more news. But in the meantime, shares for Rio Tinto, they're doing pretty well as well, up about 8% year to date.
We also had Woodside numbers out as well.
Yeah, that's right. Production numbers from Woodside. We'll get the full earnings, the first half earnings result in about a month's time. But sales revenue, very healthy, up 28% on year, $4.19 billion. As you would expect in an environment of elevated energy prices. Production, meanwhile, over the same period, contracting 18% to 41.3 million barrels of oil equivalent. Going forward, Woodside's narrowed the range of its production guidance, but it's still towards the centre of what it had previously said, about 174 to 185 million barrels of oil equivalent, and a whole series of updates on a number of projects, including Scarborough, now 98% complete. This is off the coast of Western Australia, still scheduled to deliver its first gas towards the end of this year.
Bloomberg's Paul Allen there, and we'll be taking a deeper dive into Rio Tinto's earnings print, the strategy up ahead with CEO Simon Trott as the company continues to push its core growth strategy in copper. Do stay with us for that exclusive conversation. Paul and I will be chatting with him at the times on your screen. More ahead here on the Asia Trade. This is Bloomberg. Property firm Hongkong Land has reported an 11% year-on-year increase in underlying profit in the first half and now projects a full-year upgrade. Bloomberg Intelligence noting that recovering central office prices supported by Hong Kong's IPO resurgence and a flight to quality are helping drive that growth. Joining us exclusively now is Craig Beattie, who's the CFO of Hongkong Land. Craig, great to have you with us, and some pretty robust numbers there. How do you feel about those, particularly when it comes to the momentum being able to be sustained going forward?
Good morning, Heidi, and great to be here. And I'm really pleased with our results in the first half of 2026. I think to see Hongkong Land return to earnings growth up 11%, but up 14% on earnings per share. And not just our earnings, but also our property valuations have increased in the first half by 3%. So I think the positive momentum that we've seen in Hong Kong and also Singapore is laying the groundwork for a recovery for Hongkong Land.
What about leasing momentum? Do you expect that to be sustained, or is it sort of still a situation where we'll be seeing a bottoming out towards the end of the year?
No, we've seen solid recovery quarter on quarter in terms of demand for prime central office in Hong Kong. What we saw 12 months ago was the market start to bottom in terms of rents for central. And then we saw that start to turn into growth at the end of 2025, and that momentum is built throughout the first half of the year. So actually, we anticipate that growth momentum to continue throughout the rest of this year and then through 2027.
For Central in particular, do you expect further occupancy increase, rental income to increase as well for the second half?
So what we're seeing right now is really high occupancy levels in our portfolio. We've got 4.5 million square feet of prime office buildings in central Hong Kong. We're close to 95% occupied. We're seeing the narrowing of rental reversions in office reviews. And because of the rising rents in the market overall, it puts Hong Kong Land in a really good position to capitalize on that. And what you should expect to see is our rental income for Hong Kong office start to stabilize after a more challenging period of about 5 years. And we're anticipating growth to start to come through from 2027 onwards.
What sort of trend are you observing when it comes to the luxury space? When it comes to spending, is it sort of more locally based? How's the tourism aspect as well?
So for Hong Kong Land, we're in the midst of a $1 billion renovation of our retail in Hong Kong, the Landmark. We call that project Tomorrow Central, and what we're really trying to do there is bring the world's leading luxury brands to create global flagship stores, one-of-a-kind concepts for Hong Kong. And really the business case that underpins all this is the resilience of the ultra-high net worth consumer in Hong Kong. Hong Kong is, number 2 globally in terms of high net worth individuals, ranks only second to New York. And so that deep pool of wealth in the city really drives the Landmark retail proposition. 85% of our customers are Hong Kong residents. Only 15% is tourism. So really for us, it's about continuing to grow our market share in what is really a very attractive market proposition in Hong Kong.
I wanted to talk about the broader macroeconomic environment and also monetary policy as well, because obviously with so much uncertainty and volatility in the inflation outlook, we're starting to see these major central bank decisions very much live. How does it impact your business if potentially we see, certainly before the end of the year, some tightening from the Fed?
The real estate sector, of course, is sensitive to interest rates. So for Hong Kong Land, we've been in business for 137 years. We manage our balance sheet very carefully. And so we have hedged out a lot of our interest rate exposure in Hong Kong, which of course is tied to US interest rate policy. But also we're very active in other markets. In mainland China, the renminbi interest rate continues to be low. And in Singapore, where we recently established a new private fund platform, interest rates have actually been reducing, reflecting the strength of the Singapore economy and also just the flight to quality and resilience of that currency. So for us, we're managing different interest rate environments, but I think from where we stand right now, we're in a position of strength.
I'm glad you mentioned some of those ex-Hong Kong projects. Can you give us an update on how the West Bund project in Shanghai is going, what those sort of pre-leasing levels are looking like?
So West Bund it's an 18 million square feet project. It's one of the biggest projects in Asia Pacific. It's the largest project in the history of Hong Kong Land. It's a mixed-use project, so we're building office, retail, hotel, service apartments, convention center. It's 20% built, close to 20% built, so we still have 80% yet to open. The balance of 80% will gradually open in phases over the next 3 to 4 years. So in terms of the 20% that we've opened so far, most of that is occupied. We're 85% committed on the retail, 95% committed on the service departments, and we have 4 office towers, 3 of which are fully occupied. So it's early stages for the project, but what we're seeing is really positive overall.
Tell us a little bit about progress when it comes to the Singapore fund as well. How's investor interest looking like?
This was a real highlight for us. When we launched our strategy at the end of 2024, it signaled out that we really wanted to work with third-party capital, take the existing strong asset base that Hong Kong Land has, and put some of that into potentially some fund structures. And so we set to work throughout the course of 2025 to set up what is our prime private real estate fund in Singapore called SC Pref. That was established in February this year. And we've attracted some amazing cornerstone investors, including QIA and EPG. And so we've built this platform. We've had it set up. The AUM at launch was over 8 billion Singapore dollars. Our plan is to grow that to at least 15 billion Singapore dollars in the next sort of 4 to 5 years. So having this platform with Hongkong Land as the manager, it gives us a great opportunity to grow in Singapore. And so the team's really active right now, looking at a number of opportunities to try and grow the platform out.
Part of that refocusing, obviously, is then divesting non-core. What other assets do you think might be on the chopping block? And what else could we see when it comes to share buybacks as well?
So the whole strategy that we announced 18 months ago was really about simplifying Hongkong Land, getting back to our core DNA as being the owner and operator of some of the best real estate in the world, particularly in ecosystems. So what we have in Hong Kong with 12 buildings, what we've built in Singapore and what we're building in Shanghai is really representative of Hongkong Land, and that's what we are focused on going forward. The residential build-to-sell business had been a good, strong part of the group for many years, but we've decided to no longer invest in that, so we're winding that down at pace, and that's reflected in the capital recycling numbers that you've seen. I mean, we've now, really in the course of 18 months, recycled $3.7 billion US, and of that, we've taken 20% and allocated that to share buybacks. So we continue to deploy share buybacks. We've invested about close to $500 million US in the buyback of our shares, and you're starting to see the benefits of that now in our results. I mean, that's why our earnings were up 11%, but the EPS was up 14%. That extra few percentage points is really due to the buyback of the shares. So I think the buyback is part of our ambitions to really create long-term shareholder value.
Craig, really great to chat with you. Appreciate your time. Craig Beattie, who's the CFO of Hongkong Land. More ahead here in the Asia Trade. This is Bloomberg.
Here are some of the tech stories that we're following. An OpenAI agent that breached Hugging Face systems also compromised a customer at a second technology company, Moto Labs. Hugging Face says the agent broke into an isolated testing environment known as a sandbox. The Moto was running for a customer. Moto CTO says its own platform was not compromised. OpenAI declined to comment. More than 1,100 employees across leading AI firms have signed a petition urging the U.S. government to support measures that could slow the pace of AI development. The letter signed by workers at OpenAI, Anthropic, Google, and Meta warns that AI could be advancing faster than humans can control. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens as we're watching that AI selling continue, that rotation out of tech, Haidi. And of course, we'll be watching the reaction here across Asia to SK Hynix missing those very, very lofty second quarter earnings expectations. And of course, throwing the variable of Iran-U.S. tensions, not to mention central bank decisions, and you have fireworks this week.
I'm still shaking my head at the sentence that a 557% quarterly profit has managed to disappoint expectations, but that is really kind of the excessive world that we find ourselves in. And it's an interesting time in the space, isn't it, Shery, with the AI bond binge coming at a time when there's all of these questions when it comes to overspend, when it comes to potential softness in demand, and of course a threat of all the advancements that we're seeing out of China as well.
And you really do not want to be a central banker at this point. I mean, all of those variables that you mentioned, and of course, inflation fears with oil prices rebounding today. That's something that the Bank of Japan will be facing this Friday. And we'll be watching the JGB space very closely for that, because those gains in JGBs have been capped by also fiscal concerns here in Japan. We now have reports that the government may be thinking of cutting the food sales tax to 1% for 2 years starting April. What will that do to the fiscal picture here in Japan will be a key question for bond market investors, for equity investors, as well as we continue to see the Japanese yen trading at that 40-year low against the U.S. dollar. We're watching, of course, the tech sector, given, of course, the AI selling that we've seen. The Philadelphia Semiconductor Index in the U.S. now falling into bear market territory at a time when we're watching some of these plants in the semiconductor hub of Kumamoto Prefecture, where we had this massive earthquake yesterday. We know the likes of Honda, for example, have paused, halted operations operations at one of their plants. We'll be watching Japan Airlines, for example, for the resumption of flights there as well. But take a look at the Kospi, because it's South Korea where we'll be watching earnings, not only from SK Hynix today. Samsung also reports this week. SK Hynix, we're talking about this with Haidi. I mean, yes, that profit surge of 557%, and you still manage to not necessarily have investors too happy for you. Right now, the gains muted at 2%. And we have seen already the fall for SK Hynix, right? Down about half a 50% or so from their June peak. At a time when the Kospi has also plunged in the previous session, we're now up 1.8%, perhaps a little bit of a rebound from its worst day since March. But when it comes to the Kospi as well, we're down about 60% or so from this year's gains. And the Korean won also trading at those very weak levels of 14.56 and really headed towards 1400 at this point, Heidi.
Yeah, take a look at the reaction when it comes to Brent at the moment. Coming online, a jump of 3.3% at the open after we saw the US repelling the surprise Iranian attack. All of this kind of goes to just how much uncertainty there remains after a few days of what sounded like sort of calming tensions, right? We heard even rhetoric from President Trump saying that he thought there was a good chance that another ceasefire deal could be reached. But now the surprise attack, the sort of re-upping of these fears for the energy market, Brent crude 3.3% higher at the open, adding to that just about 5% increase at one point when it comes to trading in WTI, reversing some of the 14% loss that we've seen over the past 3 sessions where the markets were feeling a little bit better about the situation. We also had sort of elsewhere around the region, Saudi Arabia's eastern region, a second day of Iran-backed militias in Iraq firing drones at those facilities for oil as well. So a lot of pressure when it comes to the oil space, a lot of concern over what happens with the Strait of Hormuz, as well as some of the tensions over the Red Sea going on as well. Treasuries is an interesting space to be looking at the moment, because there has just been really not a lot of consensus on how potentially investors and markets will react if there is a surprise rate increase from the Fed on Wednesday. So what we are seeing is that sort of heightened cross-asset volatility in the near term, since some of these market moves point to the increasing vulnerabilities there. So we'll be watching that very closely. When it comes to Australia, we're actually seeing upside of 0.7%. A big earnings day, Rio Tinto. In fact, Rio Tinto shares gaining 2.8%. We had a profit beat for the first half underlying numbers there. And some of those energy names will be boosting that market. But tech, entirely different story at the moment, Shery.
Yeah, let's delve into the results from SK Hynix, whose record quarterly profit has fallen short of lofty expectations, adding to fears that the AI boom may be slowing down. Seoul Bureau Chief Kat Barton joins us now with more on this. And Kat, we know that SK Hynix is sort of this global sentiment test when it comes to AI hardware. Can you break down the numbers for us, because they still fell short of expectations?
As you say, Shery, they fell short of expectations, but we're still talking about massive profits here. These are huge numbers. And they've also announced that their capex is going to increase dramatically. We're hoping to get more details on that shortly. They're giving a briefing right now, so we're going to get more information about what's going on there. They're also unveiling some more details of new longer-term deals that they've been signing with key clients. So overall, although obviously they have missed these expectations, as you've pointed out, they're still looking fairly solid. I mean, these are huge numbers, record quarterly profits for them, and they're about to give more details in terms of exactly what this means over the next few quarters.
Kat, it hasn't really helped that we've seen kind of the trend of mega listings in the US calming down after the initial fervor, right, as well. As you say, this is really just about the enormous expectations. But to be fair, a lot of this concern is to do with the competition from China, is to do with how much the massiveness of the spending, right, that we've seen, and how much debt is also trying to come onto the market at the same time.
You're absolutely right. SK has been hit by those concerns, because obviously this week we've seen a lot of, good news in some ways out of China, but it has shaken investors' hopes and and made people question, should they be pouring quite this much money into these huge South Korean or the US firms that are, spending quite so much, when China is obviously, some of them seem to be doing similar things for much, much less. But a lot of the volatility we've seen for South Korea specifically is also linked to quite domestic issues, which is, they approved these leveraged ETFs a couple of months ago, and that has caused a huge amount of volatility for Samsung and SK, with South Korean retail investors piling into them, hoping to see huge upsides. But that also means they're seeing huge swings and huge downsides. So some of this massive, massive volatility, yes, it's linked to China. Yes, it's linked to, cooling on that global AI play. But at the same time, there's a lot of domestic retail investment sentiment going up and down here.
And Kat, of course, we get Samsung earnings on Thursday as well. They've been catching up to SK Hynix when it comes to the HBM sector.
Yes, you're absolutely right. They've been chasing them for a while, and now they're shipping this HBM4. They've almost, in some ways, tried to pull ahead there. It's both of them are key suppliers to NVIDIA, and we've got to see more details of those deals going forward. SK had announced obviously new deals with NVIDIA last week from San Francisco. So I think as we get more information about exactly how those will play out over the coming years, including massive new investments in South Korea, in building more here and producing more data centers, building more fabs, etc. in future. So we'll have more details of those coming. And then, yes, we'll have Samsung results tomorrow so we can see how both of them have shaken down.
Bloomberg Seoul Bureau Chief Kat Barton there with the latest on SK Hynix, as well as a preview to Samsung's earnings this week. Let's bring in Peter Kim, Global Investment Strategist at KB Financial Group. Peter, great to have you with us. What do you expect to be the impact of these results, both from SK Hynix, lofty expectations they're missed, but also Samsung when it comes to the broader Kospi?
About a month ago, maybe I would have thought that this earnings would have been a main event because of the heightened expectations and retail focus. But after the recent sell-off, the earnings would not have that much of an impact because the markets did not fall because of earning expectations. Markets are falling at the moment with the deleveraging of the retail ETFs. So as much as earnings matter, I think for the time being, we just have to watch the fund flows, retail sentiment, and the unwinding of these two-time single stock leverage ETFs.
What's been the impact of those leveraged ETFs, and has some of that been flushed out of the market, especially speculative moves?
The amount of leverage ETFs, not just for the single stocks, but the entire DRAM space, not just in Korea, but you have US, Hong Kong, and even in UK. That has really made this greed and fear phase a lot more sharper and a lot more extreme. I think you can see over the past 2 months how the speculation has overpassed the fundamental investors, and I think it'll take a while because the scale of the leverage and retail flows that has gone into these products is not going to be flushed out within 1 or 2 weeks. However, again, the fundamentals, if you look back where we were 2 months ago, fundamentals has changed marginally. A lot of the negatives that's coming out on the sector is because of the price correction that has brought a lot of the negatives coming out and overshadowing the positives.
Peter, I mean, yes, we look at the volatility in the South Korea market, but overall, when it comes to the strength of this economy, especially with these huge exports of chips, why is it that we continue to get this massive pressure on the Korean won? And will this have any meaningful impact also to the investor calculation on investing more in the Korean stock market and broader assets?
Right. Currencies matter a lot for the institutional investors. Obviously, the weakening that you're seeing in Japan, India, Indonesia, and Korea, probably the four weakest currencies at the moment. The currency depreciation of the won, primarily driven by capital flows rather than trade. And even the export companies that really shore up the currency market for Koreans, they are taking a view by keeping their forex earnings overseas. So it is a bit of a smaller version of what you're seeing, how Korean investors, both individual, institutional, and even corporates now, taking a view because of this momentum you're seeing in currencies and equity market is so strong. One of the reasons why Korean government decided to introduce the single stock leverage ETF is because there was this capital outflow into other markets seeking greater leverage on this semiconductor theme. So it is a double-edged sword. Unfortunately, in this case, for leverage ETFs, it has been a wrong decision, and it's definitely backfired.
Here in Japan, of course, you mentioned the Japanese yen. We're still trading around 40-year lows against the U.S. dollar. Will the Bank of Japan's tightening path help supporting the currency? What can we expect on Friday?
I think Japan's got an entirely different set of problems in the sense that you're not only looking at trade flows, you have, for the first time in decades, inflation. If the U.S. is wondering how they can unwind the QE after 15 years, imagine what BOJ is facing after 3 decades of excessive liquidity and stimulative efforts to try to unwind that through no choice of their own because they have to tackle inflation. So I think Japan's very interesting. I think there is a lot more going on there than even U.S. or anywhere in the region.
I mean, we're seeing reports now that the government wants to really cut the food sales tax. What are the implications for the Japanese bond space as well? I mean, we have seen JGBs see the immense pressure here in Japan on those fiscal concerns.
I think the currency, to me, is signaling so many different trends. One of them is the fiscal stimulus that I think for the first time in 20 years, we're finally seeing concerns. How sustainable is this government debt growth strategies by governments like Japan? And I think given the geopolitical issues, capital flows being so rapid, I think BOJ will have to watch very closely what the repercussions on some of these structural shifts that we're seeing, not just for the BOJ, but the entire region.
And of course, for the BOJ, what the FOMC does will be very consequential, especially when it comes to rate differentials, right? I mean, this FOMC seems to be a very uncertain one. UBS now calling this the most uncertain imminent Fed decision in about 20 years. The fact that we're not getting that signaling from the new Fed Chairman Kevin Warsh, how consequential will this be and how live could he make this meeting?
He can take it in so many different directions, and the uncertainties is that his dovish stance going into this position, how much was that politically influenced, or how much of it is really his opinion? Nobody knows. I think so. Therefore, the uncertainty of facing the Fed is uncertainty facing the rest of the world, and I'm sure the central bankers everywhere will be watching very, very, very intently.
Yeah, traders pricing in a 1 in 3 chance of a rate hike on Wednesday. Peter Kim, good to have you with us, global investment strategist at KB Financial Group. We have more ahead on the Asia trade. This is Bloomberg.
Today, The Fed decides.
Share wars just around the corner, setting the stage for a real debate. Is this meeting live or not?
Our number one objective is getting policy right. And if we get policy right, we can deliver lower prices.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis.
The sum of this is real GDP and the inflation piled on top of it.
That's going to cause inflation that does come into consumer goods in other ways.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
We'll take a look at what oil is doing. We saw that 3+% pop at the open when it comes to Brent, headed towards that $87 a barrel level. WTI in this session putting on as much as 5%, around $83 a barrel, and this really reversing some of the 14% pullback that we've seen over the past 3 days, where some semblance of calm seemingly had been restored. But of course, that has now really been pierced by the fact that we've had these surprise attacks on US bases across the region, intercepted by the US, as well as these ongoing Iran-backed militias in Iraq firing drones at oil facilities in Saudi Arabia as well for a second day. So a lot of pressure on the energy complex at the moment. But let's get some more when it comes to this re-escalation in the US-Iran conflict. Our Middle East correspondent Dan Williams joins us now from Washington. And so there wasn't a great deal of specifics that we heard in terms of optimism, but certainly the mood music coming from President Trump over the past few days had been a little bit more optimistic about the prospect of a renewed deal. Does this surprise attack from Iran show us just how uncertain the situation remains?
Absolutely. It will certainly be jarring. It will certainly be a reminder of how combustible the situation is. There has been some speculation that it's not clear who exactly is calling the shots in Iran when it comes to negotiations through diplomacy or negotiations through firepower, or both at the same time. I'm not sure that's very important. I think on the American side, the Israeli side, given the meeting between the leaders, they at least are showing that they know what the pecking order is. The meeting at the White House today by the Israeli Prime Minister was an opportunity by Benjamin Netanyahu to state publicly that Trump is the one calling the shots, Israel effectively submitting to the US lead in this campaign. The big question is why the Iranians chose to resume, it would appear, their attacks, albeit on a limited level, albeit an attack that appears to have been successfully intercepted. Perhaps they suspect that behind the scenes, behind this mood music, as you aptly named it, the two leaders, the leaders of Israel and the United States, actually spoke about a potential resumption of the war, and the Iranians are showing that they are ready to fire back. For now, it would appear diplomacy is the choice, both of Trump and of Netanyahu. He said explicitly he would prefer a diplomatic deal.
Dan, the timing is really interesting, isn't it? Of course, with the Netanyahu-Trump visit, that we have this surprise attack from Iran. And it was also very interesting, the discourse between the two leaders, President Trump saying, you don't need to tell me that, when it comes to showing him evidence of the nuclear program. You said that both leaders at this point prefer a diplomatic deal. How likely is that, given obviously the continued deterioration in trust with these three parties?
Well, it takes two to tango. If the Iranians aren't interested, and they're publicly saying they aren't interested, publicly at least, it would appear that the United States, specifically the US president, is the most voluble, not only about threatening a resumption to war, but also talking up the idea of a diplomatic resolution. Publicly, the Iranians say they're not really interested. They're willing to keep fighting. It would appear that they're banking on US exhaustion, on Trump eventually losing interest and leaving them de facto in control of the Strait of Hormuz, a very lucrative means of offsetting their major losses during this war. I'm referring, of course, to the tolls they would exact from ships going through that strategic waterway. It would appear that they're simply trying to wait him out. The Israelis, I imagine, would not be happy with the prospect of the US walking away. And it would appear that Netanyahu, in this meeting in the White House, sought reassurance, if not that victory would be achieved against Iran anytime soon, and victory, as Israel would define it, would be an end to this regime. in Iran, a complete changeover of decades of clerical rule there, it would appear that the fallback option, the bare minimum the Israelis would be satisfied with, would be an end to Iran's nuclear program. Trump says he's completely on board with that. He's repeatedly talked about having guarantees that the Iranians will never be able to build a bomb. The question is whether the Iranians could deliver some kind of guarantee beyond lip service, given that they still retain stocks of enriched uranium. There are reports that they have secreted some of their centrifuges for further enriching uranium. Should that not be given up, should that not be seized or disposed of by the allies, there's a big question over whether, even on this basic level of reassurance, something could be agreed by the sides through diplomacy rather than through war.
Our Middle East correspondent Dan Williams, and we are now seeing further escalation or retaliation when it comes to these regional tensions. The US and Saudi Arabia striking Iran-backed weapon sites in Iraq. They've struck out in response to the IRGC-directed drone attacks that we spoke about just a few minutes ago. They've been striking terrorist logistics weapon sites in Iraq and saying that the fighter aircraft striking multiple terrorist logistics targets there. The US saying the unwarranted attacks against US forces were not successful. We've seen now for a second day that drones have been fired by Iran-backed militias in Iraq at oil facilities in Saudi Arabia's eastern region for 2 days in a row now. We've heard from the Saudi government that Iraq needs to take all necessary steps to ensure that its territories are not used as a launching pad for such attacks. The Houthis have claimed that they targeted these oil facilities in Saudi Arabia with drones and said that they targeted an oil tanker as well with ballistic missiles in retaliation for the violation of the maritime blockade. Shery.
Yeah, we continue to watch the flows around the Red Sea. Of course, we are now seeing that rebound when it comes to oil prices. But Haidi, we're also keeping an eye on the trade front. China mounting a forceful defense of its booming exports, rejecting Western claims of overcapacity as it braces for escalating trade friction with the U.S. and the EU. Let's bring in our China correspondent, Mimi Lo, for more. And China now issuing a position paper rebuffing overcapacity claims. What does it say?
Yes, this is one of the most forceful defense that China has launched so far because it's a 10,000 character position paper, very long paper, really hitting back against what China is calling hyped up claims of overcapacity. The Commerce Ministry is saying that this is meant to set the record straight. And of course, this is coming as the U.S. has launched a probe into Chinese overcapacity that could lead to more tariffs. And China's trade surplus with the EU also hit a new record. And Brussels is close to this October deadline to reset its ties with China. So when it comes to the position paper, China had argued against that. If you look at the data, here you can see the industrial capacity has fallen significantly, down by 73% in the second quarter. But China says that this single indicator does not necessarily mean overcapacity. It cited some examples of trade surpluses ran by the US and the EU as examples of how trade surpluses doesn't necessarily mean excess capacity.
Right, Bloomberg's China correspondent Mimi Lo there as we continue to watch the latest developments around the U.S.-Iran war, with the latest now headline coming that the U.S. and Saudi Arabia strike Iran-backed weapon sites in Iraq. This is Bloomberg.
Take a look at what we're watching when it comes to US Treasuries at the moment. We had some consternation when it comes to the 7-year Treasury auction. There's not a great deal of conviction at the moment, given some concerns that could potentially see a surprise from the Fed in the FOMC meeting this week, and if not, certainly perhaps a cementing of expectations of a rate hike before the end of the year. But this comes as we see a resurgence in oil prices as well, feeding through eventually to that broader inflation outlook, with no signs of a resolution yet when it comes to the war between the US and Iran. And at the same time, of course, we're also contending with some of the turmoil in the AI space as well, at a time when we're seeing that really flood of debt interest from big AI names coming to the market, when we are seeing that broader investor uncertainty over demand. And we've seen this for months now, right? Big tech flooding debt markets with mega bonds, initially really snatched up by investors keen to get any exposure to the AI boom. But as demand potentially wanes, as bubble concerns are now mounting, these deals are becoming harder and costlier to get over the line. Let's bring Zerlina Zeng, who's the head of Asia strategy at CreditSights. Zerlina, what do you make of this? Because there is quite a lot of concern at the moment from investors that we have just seen this huge run up, and certainly the debt markets are always the first to start showing those cracks.
Morning, Heidi. Thanks for having me here. So I think the debt supply hasn't really been a new issue to the market. Our US technology analyst was already looking at 650 billion of hyperscaler capex end of last year. We upsized the number to 825 billion now. It is some increase, but this issue is not new to the market. I think what matters now is the technical is not really supporting. Over the past couple of months, we have a few deals coming to the market which sound a little bit desperate. Amazon 25 billion during the blackout season. SpaceX, that deal was fast and furious, didn't do very well in the debut market. Then the market started concerning about NVIDIA circular financing, the Google upsizing the capex and also turning to negative free operating cash flow. So if you look at the selling off, we would say it's very technical. It's indiscriminate across the hyperscaler space, and with a lot of investors not really looking a lot into the credit fundamental at the moment. At the same time, if you look at the other spectrum of themes, there are still some stocks and names and bonds holding up relatively well, especially for some of the Asia tech name, as well as in the US space, names like Dell, Intel still holding up well over the past couple of quarters. So we would not say this is a catastrophic selling off at the moment. It's just very technical. We also heard that some of the clients are already loaded up with US tech bonds, so they're looking again at the sector concentration and the risk exposure. It's an adjusting of the positioning and reassessing of the exposure to the sector.
You expect the AI new supply issue to continue pressuring spreads well into next year?
I think for the rest of the year, we expect a new supply coming to hyperscalers will be relatively limited because they did a lot of equity funding. But the supply issue will indeed emerge again in early 2027. And other than the traditional bond market, the hyperscalers are also tapping other structured debt. For instance, there's a lot of IG private credit. For Meta, it is using the off-balance sheet, raising the funding for its hyperscaler data centers in Louisiana and Texas. So a lot of different structures of debt come into the market, and that were to some extent to divert some of the demand for the public traditional bond market. So we think over the next couple of years, an issue will indeed continue to be an issue for US IG tech. But over the rest of the year, we think the technical headwinds will likely reduce. And I think investors should not forget, for a lot of the hyperscalers, the balance sheet is still very solid. The free operating cash flow is also very strong, and they do have other options such as raising equities. They could also sell their stakes in OpenAI and Anthropic, and that could raise certain level of cash. And they do have a lot of other options to fund their capex needs. So I think overall, people need to take a very balanced look at this sector, not just indiscriminately selling. There are indeed still alpha opportunities within the IG tech sector.
It's interesting because even though this sort of existential moment comes from the advancement that we've seen in the China AI complex, even some of the China names are coming under pressure as well, right? Because there's some concerns about overcapacity and what happens with Chinese industrial policy, and is it a repeat of history? Do you prefer Chinese tech bonds, though, in this space? What are the opportunities there?
If we look at the performance of the past couple of months, China tech, or I would say in general, Asia tech, even SK Hynix, TSMC, these names in the bond market, the spread movement is a very significant outperformance of US IG tech. I think for a couple of reasons for the China tech you just mentioned, recently the momentum on the headline has been very positive. There's this Changxi memory technology IPO. There is the coming out of the Moonshun, the Kimi 3, and there's also the news about that China might be able to do more advanced DUV lithography on the semi-capital equipment front. The news headline is very strong, and for the Asia bond market, we still have the luxury of a persistent limited new supply versus the US IG market. You're seeing a lot of new supply. So when we look at the spread performance for Asia IG tag and China IG tag, it's a very big outperformance. China IG tag over the past couple of months was flat to only marginally wider. You do see some pressure at the long end, but overall it's performing very strong. Moving on to the China side, I think yes, there could be an overbuild issue, but this is not just for China. Actually, we are one of the first houses on the street highlighting this potential medium-term data center overbuild in the U.S. market, and we are looking at bottom up a U.S. utility, the new power coming online versus the actual third-party forecast demand, and the overbuild could be very substantial by the end of the decade. So this is not an issue just for China. So I think investors, especially bond investors, really need to looking into the ROI of the AI investment, the sector concentration, and also I would not suggest bond investors to go really down in credit quality because your upside is just very limited up to a coupon. It's a different story for equity investors.
Where to for private credit? Because we've seen some sense of stabilization when it comes to redemption requests, but we have also seen some gauges defaults coming in at a record high in the second quarter.
Yeah, I think when we look at the private credits, we, for now at least, are not really seeing a systematic risk because the size of the market is still relatively small. Even in the U.S. market, is about $2 trillion. The penetration to corporate bond market is relatively limited for U.S., Europe, and Asia. And when we look at the exposure of insurance banks to private credit market, it is indeed increasing over the past few years, but so far it's still manageable. And the concentration is relatively in the large U.S. banks, large Japanese banks, and some of the large European banks. So we think risk is overall under control. And when you look at the redemption, yes, we indeed still see negative news coming out for the BDCs. Redemptions are likely going to continue into the future, especially for the perpetual BDCs. But on the direct lending drawdown funds, the inflow is actually very substantial across most of the private credit houses. I think for a lot of institutional investors, this is still one alternative asset class they are looking into. Retail investors definitely is a different story. We would see the flows to be more fickle, but institutional money we would expect it to be relatively more sticky. So it's an evolving market. I think over the next couple of years, risk reward is definitely not going to be as great as the past few years. There's a competition, very intense competition coming from the leverage loan market. We do see some deterioration in documentation as well, and the default is picking up, but we're not talking about more than 10%. If we just look at the privately monitored portfolio from Fitch, it's still within single digits, a few percentage points higher than leveraged loan market and U.S. high-yield corporate bond market. But I think we are still not at the stage of entering into a systematic risk.
Zerlina, always great to have you on with us. Zerlina Zeng, who's the head of Asia strategy at CreditSights. Let's get you caught up to date with some of the corporate stories that we're tracking this hour. More than 1,000 employees across leading AI firms have signed a petition urging the US government to support measures that could slow the pace of AI development. The letter signed by workers at OpenAI, Anthropic, Google and Meta warns that AI may be advancing faster than humans can control. It calls for an international framework to manage the development of increasingly powerful systems. Chinese startup Moonshot AI is reportedly seeking more of NVIDIA's advanced Blackwell chips to train its next-generation model, Kimi K4. The Beijing-based company trained its earlier Kimi K3 model on NVIDIA hardware, despite US export restrictions on advanced AI chips. The report from tech outlet The Information comes as NVIDIA CEO Jensen Huang continues to champion open-weight AI models. Apple is said to be planning a launch of its new Home Hub, centered on its upgraded Siri AI assistant. Sources say it's also readying a refreshed Apple TV set-top box and a HomePod Mini for launch in the coming months. The Home Hub is expected to follow by early next year. This push puts Apple in more direct competition with Amazon's Echo Show and Google's Nest Hub. More ahead here on the Asia Trade, this is Bloomberg.
The death toll continues to rise after a powerful 7.1 magnitude earthquake hit Japan's southwestern island of Kyushu on Tuesday. An unknown number of people may still be trapped in a collapsed shopping mall in Kumamoto Prefecture, a hub for Japan's chip industry as well. Breaking news editor Gareth Allen joins us with more on this, and we might have more updates on the number of casualties at this point.
Yeah, that's right. I mean, we're seeing reports coming out of Kyoto just now which have said that there are dozens of deaths now. The previous number we had was about 5, so it looks like it's going to continue to rise. And as we know, there's still people unaccounted for, particularly in the Aeon Mall, which of course had that big explosion a couple of hours after the earthquake yesterday. And there've also been a few deaths at various plants. Nippon Paper is believed to have had a couple of deaths, and they've had some damage at their plant there. Their shares were down a little bit this morning, but they've pared the losses since then. So I think the impact is probably not that big. Other companies, Honda, for example, has said that their plant is going to be closed this morning, and they're not sure when it's going to be back online. Toyota has just said, according to Kyoto, that they are back online this morning. So, the impact on companies is a little mixed at the moment.
Especially given that this is a semiconductor cluster.
Yeah, that's right. And of course, the big ones, Taiwan's TSMC, which evacuated their staff after the earthquake yesterday because they felt that the shaking was intense enough to kick in their BCP plans on that sort of thing. We believe they're coming back online this morning, but probably impact is probably not that huge, but certainly there has been some temporary halts to production.
Gareth Allen, thank you so much for that update. Bloomberg's breaking news editor, as we continue to follow the fallout from the earthquake here in Japan. Of course, we've been watching Tokyo Electron as well because they have facilities in Kumamoto Prefecture. We're also following SK Hynix, given their second quarter results just missed expectations. They say that it doesn't see signs of AI investment slowing down, that the AI infrastructure investment is going to remain solid beyond 2027. They're now vowing to strengthen HBM leadership through long-term deals, although they don't expect these long-term agreements to lead to oversupply. They have now announced profits surging 557%, operating profit coming in at $42 billion. The company saying that it secured a multi-year contracts with about 10 customers, and net income beat expectations thanks to a one-time investment gains. We're also watching Kioxia gaining more than 2.5%. This, of course, as we're also headed towards their earnings results to come out this week on Friday. They should have been reporting more than double its earnings from the prior quarter because they have become just briefly Japan's most valuable firm just in June. Now, it's facing mounting pressure from customers and shareholders to expand capacity and defend its technological lead against rivals. The global AI spending spree has reversed the company's fortunes, but its turnaround is already being tested by concerns over big tech spending rush. Let's bring in Asia Tech editor Mayumi Negishi. And Mayumi, as I was saying, this was Japan's most valuable company at one point, but also going from the rags to riches story. And now again, they're under pressure.
Correct. As Kioxia is really kind of encapsulate and magnifies the AI boom. They're a true accidental beneficiary of the AI boom. They happen to be in the right place at the right time, just as the biggest rivals, SK Hynix, Samsung, Micron, all rushed into the more lucrative high bandwidth memory chip market for NVIDIA. By doing so, they created an opening for Kioxia in a sort of less sexy area of NAND flash memory, which has become so important as AI services require so much data and instant. Like whenever you use your AI services, all the context is stored in cache memory, and there you need NAND flash memory to support that.
I mean, and this is such, until now at least, it's been such a cyclical market, right? So how big of a challenge is it for Kioxia to be deciding right now, do we stay disciplined or do we just invest aggressively while we can?
So Kioxia has been burnt so many times and so brutally in the past that they are being very cautious. They are letting their customers come to them and ask for multi-year contracts for the first time, and they're enjoying this. The danger is the moment when Samsung or SK Hynix decide, oh, hey, this area of NAND flash is interesting, and they start mobilizing their far bigger capital into that direction. When that happens, can Kioxia keep its edge? Can Kioxia keep ahead of its rivals? Can it gain enough of a lead right now with companies like NVIDIA to say, hey, you should stick with us because our technology is proven, you've used us, and that lead is, they're trying to replicate what SK Hynix did with HBM, you see, and we'll see if that works.
And we've seen, of course, the earnings results today and that sky-high expectation for those results disappointing investors. But when it comes to the memory conversation, it seems that a lot has now shifted towards not just is there enough memory demand out there, but what about memory pricing? Will customers be okay with this level of prices? How does Kioxia fit into this story?
Correct. In our reporting, we actually go behind the scenes with Jensen Huang, who kind of gave a veiled warning that should certain memory prices or certain other components pricing or bottlenecks become too big, that NVIDIA actually has the ability to tweak its architecture to lower reliance on those parts that have created bottlenecks and sort of redirect the architecture so that it can control the costs of its systems and NVIDIA systems, which is very frightening for companies, right?
Yeah. I mean, this is a very competitive landscape. Mayumi Negishi, always great to get your insights. Bloomberg's Asia tech editor here with the latest on Kioxia's fortunes. We have more ahead. This is Bloomberg.
Rio Tinto shares have jumped in the Sydney trade after the world's largest iron ore producer posted a rise in first half profit thanks to stronger commodity prices. We are seeing upside of just over 4% there. Paul Allen has more. Pretty good set of numbers here.
Yeah, it was. The rise to the tune 47% on year for underlying profits, $6.85 billion, and a lot of that going back to shareholders as well. $2.11 per share interim dividend as well. Going forward, Rio's maintaining its guidance on pretty much everything, sales, output, costs as well. If we break things down sector by sector, I mean, across the board, the commodity price complex has held up pretty well for Rio. It gets most of its revenue overwhelmingly from iron ore. Prices have held up there. Costs, though, are also up. Rio sees $23.50 to $25 a tonne for costs going forward for iron ore production. That is, of course, thanks to higher input costs, not the least diesel, thanks to the war in Iran, but also thanks to the war in Iran that's been helping support some of these commodity prices, particularly aluminium, with smelting in the Gulf being impacted by that. Copper prices holding up well as well, and Rio reaffirming production guidance for that also. We did hear from the CEO Simon Trott saying that they're going to be relentless in finding more productivity benefits, looking for cost savings as well, and there's already been a lot of divestments. Trott forecasting another $5 billion worth of divestments this year, and you mentioned the share price. Yeah, it's up today, also up about 8% on year.
What about Woodside?
Woodside out with a quarterly production report, and we're going to get the full first half results in about a month's time. But steady as she goes, pretty much the theme there. Sales revenue up 28% on year to just under $4.2 billion, as you might expect in an environment of very elevated oil and gas prices. Production, though, contracted 18% on year in that quarter, largely thanks to a cyclone in Western Australia, and how quaint to have an environmental factor rather than a war impacting production. Anyway, guidance pretty much reaffirmed for Woodside as well, just really narrowing the range that it's expected to land in. And we've got a lot of updates on a number of projects, including Scarborough, the Louisiana project, Trion as well, all progressing as expected. And Scarborough in Western Australia still on track to deliver that first gas at the end of this year.
Bloomberg's Paul Allen there as we're in the thick of earnings season here in Australia. But we'll be getting a deeper take when it comes to Rio Tinto's outlook, their broader strategy. We'll be speaking with the CEO, Simon Trott. Join us for that exclusive conversation. Paul and I will be speaking to him at those times on your screen, Shery.
And Heidi, we're looking forward to, of course, that conversation and watching the ASX 200 as we continue to see this sort of a mixed picture when it comes to that rotation out of tech stocks. When it comes to the future space, take a look at TAIEX futures pointing higher. We will be watching the tech sector because we're still digesting the latest from SK Hynix second quarter earnings missing expectations. They're saying that they do not see, though, signs of the AI investment slowing down. And of course, we're gearing up for Samsung earnings as well at a time when we're also digesting the latest from the Kumamoto Prefecture earthquake that we got in Japan. And I mentioned this because, of course, Taiwan's TSMC has a factory and it operates in that semiconductor cluster here in Japan. A50 futures also pointing to slight upside. We continue to follow moves around the offshore yuan. It edged lower in the previous session. We are waiting for the FOMC decision. The expectation is for no change, but of course, that will have implications for the currency space. Beijing now mounting its strongest defense yet against Western accusations of overcapacity. It's published a position paper rejecting claims of excess factory production. Take a look at how we're trading today in the Asia session because the Kospi is now looking like this as we watch the Samsung and SK Hynix moves. We're seeing gains of 1.5%. And when it comes to Japan, the Nikkei is at the moment trading higher by 0.25%, but we're also hearing from Prime Minister Takaichi speaking right now saying that 13 people have died in the Kumamoto earthquake that we got yesterday. The death toll now standing at 13. And this was a massive earthquake, 7.1 magnitude with a maximum 7 on Japan's seismic intensity scale. And we had seen an explosion also rocking a shopping mall. So we'll be following any developments around that earthquake in Japan. This is Bloomberg.